So price action is a trading technique, trading strategy, which allows traders to analyze the charts, the markets, and make subjective trading decisions based on past and present price movements. So we can define support and resistance points from price action point of view as a support is the lowest point the price reaches before reversing. And for you to draw a good support or a good resistance line, you need to use the line chart. So you don't use the candlestick chart when drawing this support and resistance points. So for a support area to be called a support, price needs to touch that area twice. So it's called a support. So lowest point the price reaches before reversing. So this was the lowest point reached, then price reversed. It came back to that same point and then it reversed. That's a support point. And the opposite now, the ceiling, the highest point that price reaches before reversing is called the resistance point. The two can be called zones. Okay, you can hear people say they're trading zone to zone. So they're trading from support to resistance point. So these levels, they work based on higher time frames. And these higher time frames, we are taking the hour 4 time frame going upwards. In these areas is where retail traders look for reversals once touched again by price in the present time. They look for the reversal patterns there. Hour 1 time frame is where they take the entries and 30 minutes time frame. Now let us define this from market maker point of view. This lowest points, highest points where the dealer has reached before reversing. These are simply the highs and lows of previous week. These are simply highs and lows of the week, of the month, or the year. So the lowest point reached in a week before the dealer reversed is called the low of the week. And the highest point reached in a week before the dealer reversed is called the high of the week. The same to the month, the same to the year. And when you go to the hour 4 time frame, the daily time frame, and look for these support and resistance points, you will be passing through these highs and lows of the months and the weeks. When you go to higher time frames like the daily, the weekly, you find these support and resistance points as the lows and highs of previous years. Then in this year, the dealer goes to touch that area again. Now, why does the dealer find these areas of support and resistance? Let us remind ourselves about stop hunt. What is a stop hunt? We can define a stop hunt as a sharp move to the high or low, and can be the high or low of the previous day, high or low of the previous week, month, or year. And the larger the time frame, the larger the stop hunt. So the dealer would find these highs, would find these lows to do a stop hunt, tap liquidity at that specific point, and then swing the market away. And when the dealer is setting the high of the month, the high of the week, usually the dealer does a stop hunt there before reversing. He needs to trap traders there in order for him to reverse. He needs to tap liquidity there in order for him to swing the market away. So we should never react to these areas of support and resistance, like what retail traders are doing. Like you can see just a reversal candle there, and then you react to that. But we should react to the dealer's action on these areas. After a stop hunt, after a good stop hunt, you see a very good pins, then you see a very good M or W, then that's where you enter. These are good examples here. This was daily time frame of GBP USD. this here was the law of January. So this is this is February. So this is the law of February, and this is the highest point of February. It came again at this point here, and then this is where I formed the resistance. This was a support point, but then the dealer came to break. It became the resistance, so it came again for a stop hunt. And you can see here, this is where I set this low, and then it came for an aggressive stop hunt. So this whole month is for a consolidation. So you can see these areas of support and areas of resistance. These zones are simply formed by the highs and lows of these months and weeks, and they work better on higher time frame. Okay, this was USD ZAR. So this area of resistance at this point, this was high of 2018 also, and he used this high to set the high of 2019. You can see how this pair reacts to these areas of support and resistance. See, USD ZAR reacts very well in these areas. You can clearly see them. So you should be drawing this. And I drew this using the line chart. So I put the line chart on, and then I draw these areas. So this is a wider view. You can see here, this was the high of 2018. And so it came this year at this high. See, the stop hunt was deep. Consolidated for several weeks, and then it moved. So this was GBP USD. This year it came to set the low of the year, which was the low of 2016. And so he did the stop hunt there. When you go to the daily time frame, you see a very good W there. And we know that a W is, see this one, this is a very good W. And the second leg had a good pin. So with this W here and this pin, you know that liquidity is already tapped. So the dealer can swing the market away. So that's all about the support and resistance points. Now let's go to this, what we call the seasonal moves. I've changed some contents in this book, so it's quite new, and it has recent graphs. But I'm waiting for the year end so that I can change the graphs for the seasonal moves, because some of them have changed. The dealer set new highs and new lows this month. Seasonal moves. We're going to see the daily structure. We're going to talk a bit of resets. So seasonal moves. So we divide the year into 4 quarters, and we call them seasons. A quarter takes 3 months. So the first quarter is January to March, April to June, then July to September. Then we have October to now, December. So we learned earlier, everyone who has been in my class know that trap moves are set in specific period of time. And one of these times is during the seasonal changeover. We have the beginning of the week, beginning of the day, end of the week, seasonal changeover, and session changeover. So we can observe these seasonal traps using the daily structure and the hour 4 time frame. We have talked of the support, the resistance point. So let's go to USD ZAR here. So you can see I've divided the quarters this was quarter 1, this was the end of quarter 1, this was March, we're in April. And then 3 months is the end of quarter 2, 3 months is the end of quarter 3, and then we have the last quarter there. So before the dealer moves, he needs to trap liquidity, even on these higher time frames. Before the dealer has this market shift, he needs to trap liquidity. We call these areas where he has trapped liquidity the peaks on the daily. So they require that amount of liquidity, and this amount of liquidity can be brought about after a long time of consolidation. This is why before any major seasonal move is made, the market shift, we can see here, before any market shift is made, for example, there was a shift here, there was a shift here, we see some weeks of consolidation. So this is several number of days where the dealer has consolidated. Several number of days, you see the spin. So before the dealer moves, he needs to trap this liquidity and then have this seasonal shift. So after, say, before any major move is made, the market experience what is called loss of liquidity on the third level there. This is the time of consolidation. You see the ADR going low on the lower time frame of the hour 1. You see the ADR is low and all that, a bit consolidation. See the market is not moving. These are times where traders ask themselves, oh, what do you see on the market? See, during that time, there's loss of liquidity. Even traders don't see entries to enter. So when they start to regain volume again, they will have a week which the market will move opposite of the majority very fast. For example, before pounds went short last week, see, many people were going short, but we saw that the dealer moved opposite of the majority very fast. It took out the traders, induced other traders to take a wrong position. So other traders, maybe they went wrong after those candles, and then they induced to take a wrong position. After this trap, they start the real seasonal trend. Usually the trap takes a bit of a week. We can see it on USD CAD is a very good pair to look at. You'll see a good week where when the dealer has to go short, you see a week where he goes long, a very good cycle to induce people to take the wrong position, and then he would reverse. Now you need to understand this, because you don't need to trade within these consolidations. See, when you're trading within this consolidation, the highest probability of losses, there's a high probability of getting a loss, because the trend is usually not followed. Usually they follow the period setup during these times. See, during these times, sometimes I look only on the period setup, I get good entries and then I get a profit, but they don't follow the cycle during this time because they are consolidating. You won't be able to see the levels, especially the safety trade is not there. See, there are times in the year where we don't see safety trades. There are times in the year where the ID50s go wrong. These are the times where there is this consolidation, this amount of consolidation. So during this time also, market makers will test your patience and that need to trade within these seasonal consolidations, because you are a full-time trader, so you need to trade. So they will test that. And at the end of this seasonal consolidation, they'll pull up a volume a little bit to see who bites. Then that's when they offer that false move before they give the real move. So you should wait until the seasonal trap move is set, and then you establish the long-term direction, you enter your trades. You can see here, this is an example of how I did my analysis on USDZAR. See, the dealers did set the high of the year. This was the low of the year. This was USDZAR. Year beginning was January, this one. This was low of the year. So the dealer set the low of the year, and until today, USDZAR is around this point here. So he did not find this low of the year. So after setting this low of the year, we had a very good long trend, very good 3 levels here. You can see it, 3 levels. These pullbacks to these EMAs are the peak resets, on the hour time frame. After then, he had a pullback here, bounced on the 200 EMA, and then formed a, see this was March going April. So this was the end of the quarter. You see the consolidation during this seasonal changeover. So these are times when the dealer has the consolidation. You don't know where the direction is at this point. Then he established the direction, but then he came to bounce here, forming this is a W here. And then we see 3 levels up. End of quarter 2 here, he had the shift, 3 levels down. At the beginning of this is the 3rd quarter, on June, we had our consolidation, and then after trapping liquidity, had a shift. See these pullbacks, these are the resets now. See, during these shifts, see, the deal will be aggressive. You need to enter on the, see, my advice is to look for, see, for example, this shift, you had to look for the long trades, rather than short trades. After this consolidation, then you had a shift and then a shift. So what do we observe on these seasonal moves? You'll go through these charts. What you need to observe, the following. Consolidation. You can see the dealer accumulates before having a shift. At times like this, stop hunt is both ways. The cycle in the hour 1 time frame is not followed. The ADR is reduced to minimum. So these are times when the ADR for EURUSD goes all the way to 34. In the 15 minutes time frame, the period setup is usually followed. So even if the cycle is not followed by the period setup, the false move going down, the pattern, so it's there. Stop and start, deep when the dealer reaches the low of previous months or years. So when you see the consolidation is around these support and resistance points on the daily, you should understand that stop hands will be deep. The second thing that you need to observe when doing this analysis on the seasonal moves, the shift now. Before shifting, the dealer offers a false move. You always see a false move there. Either you see a M or a W, or a very good short or long trade, and then the market will shift. If it's an M or a W, you can see 1 week false move, then it shifts. News is used to perpetuate the move. Yeah, if the move is sharp, they will use the news, like what they did on pound. After the shift, three good levels are seen. Hence, several peak resets of the hour and time frame. Always trade in line with the trend. So at these times when the marketers shift, weak stop-ins will be observed because the dealer has the liquidity. So the dealer will move from one level to another, one level to the next. So the pullbacks, sometimes you'll have a very good pullback, but sometimes, well, like the yen pairs have very good pullbacks, but the pounds, USDR, Mexican peso, they don't have these pullbacks. And during this time, ADR value will increase to the maximum. So these are times when Euro USD will have around 80, 88 ADR times 1. Another thing you should observe is the EMAs. When the 5 and 13 have crossed, after the false move and then the shift, that indicates a start of a shift. So the 5 and 13 crossover is your confirmation. A pin to the 13 EMA after the shift is a peak reset. A pin to the 5 EMA is a continuation of a trend. Normally, here is where the dealer would offer a peak extension on the hour time frame or quick resets, because on the hour time frame, this is the 50 EMA that the dealer will be bouncing, and you see a peak extension there, or quick resets. Sometimes you observe 3 levels after that. Pull back to the 50 EMA is called a safety on the daily. It's a safety trade on the daily. So on the hour one time frame, the 50 EMA is the 800 EMA. So at that point, we can see on the hour one time frame the dealer forming what we call the EMA type of peak. And then pin to 13 and 50. So the 13 and 50 are close to each other on the daily, and then the dealer goes there and forms pins or a reversal there. That's a solid peak reset. On the hour time frame, the 200 EMA is there, the 800 EMA is there, and the dealer forms a very good peak reset, a solid peak reset. And 200 bounce, usually it's a reversal. So you should be observing the 200 EMA on the daily time frame. When the dealer bounces around 200 or 800 EMA, usually it's a reversal. Sometimes the dealer may form a W or an M when the cycle of the 3 levels are not seen on the daily, but the dealer will form a W and M around the major quarter. That's also a reversal. That's what he did on Euro USD. We saw a good M, a fall, and then he had the first peak reset, which did not complete the cycle, but then he formed a W. And we observed 3 levels after there. Right now it's on the 3rd level. So you need to go to your charts now and observe this, what we call the seasonal shifts. And next year I'll be more careful on trading during this seasonal changeovers. So we don't want to repeat the mistakes that we did this year. So that's all I have for the bootcamp. I told you today I would talk of all that I had in mind to tell you during this bootcamp. And that will be a quick review of what happened to the whole year. If you go to the charts and observe these things, then you'll be reviewing what happened the whole year. Now, I allow questions now. Anyone having a question?
You say some contents have changed.
From the book?
Yeah.
Yes.
So how are we going to get?
How are you going to get what?
This changed content.
Is this Melvin?
Yes.
How are you going to get the book or the change contents?
Wherever the book or the changed content.
Eventually, I will send the book, but that will be on January because I need to change the charts after this year end.
Okay.
Another question?
Mm,
JP Morgan,
Yes, mister.
having any question?
No, I got no question.
Lucas, I can see Lucas here. Emmanuel.
I got
Emmanuel.
no question. I got no question.
Emmanuel, you are taught by Mvungi, eh?
Yeah.
Okay. So if you don't have any question, I'll end the session and, well, Merry Christmas to all of you.
Same to you.